Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, June 17th, 2023. And our top story today, the stock market is right back where it was when the Fed started raising interest rates. And joining me now to discuss this and a lot more is Monica Malpass of NASDAQ. Monica, great to see you. Thanks so much for joining us on the program this morning.
Hi, good morning, Jeffrey. Great to be with you.
Yeah, it's great to have you. And I want to start with the Fed announced that it was going to pause rate hikes, but it prefaces by saying we could have some rate hikes sometime in the future. And what was the market reaction to that? How did the market do this week as a result of what it was thinking versus what the Fed actually did?
Right. Well, there were two reactions, to be honest with you. So right after it happened, the announcement on Wednesday, on Thursday, the markets didn't seem to take it very seriously because they did hear that caveat at the end, the sort of comma, if you will, that there might be more rate hikes coming. So they didn't have much of a rally, as you saw. But yesterday, when they seemed to think about it a little bit, it seems that both NASDAQ and Dow investment firms seem like all the investors are like, this might be the end of the line. This might be where we're really going to see clear to the end. And so there's the giant 400-point rally, as you saw. So I think that markets react a little early usually. So it seems like in positive terms for most people's 401ks anyway, it's looking good.
Yeah, and a good point you made, and a point that I have seen over and over again is that the S&P 500 has returned to where it was when the Fed, I think it was March 2022, when it started raising rates. That's certainly a positive sign if you're a bull.
Absolutely. It has not lost long-term any of the turf that it had gained. So there was the one-year pause, and I guess technically we could see another rate hike here or there down the line. They did want to sort of save that off to the side as an option. But like you said, we have regained quickly some of that territory that was lost, which I heard a collective sigh of relief from a lot of people across the U.S., right?
Yeah, I think a lot of people, and I think Vanguard just released some interesting reporting saying that 401k balances, at least on their platform, are down this year. No surprise given all the market volatility. I mean, that's like, okay, thanks for telling us that, but we kind of knew that was going to happen. But let me just to kind of wrap things up, you're at the NASDAQ. I want to ask you about technology, because that's a big part of what the NASDAQ lists are technology companies. Early in the year, we saw big layoffs from the Googles, the Metas of the world. I don't want to short shrift anyone, but there's a lot of companies laying people off. How has it rebounded, and how is technology doing?
I think it's a split decision right now on technology. I think there's still a lot of fear out there because you're right. AI has come in. It's taken over a lot of things on the one hand. On the other hand, there are uncertainties in the tech field for a lot of other reasons. And so there's trepidation. People are really not sure what the future holds. But I think it's starting to level off, if you will. So I don't think we'll see deep dive problems anymore. But it's really kind of anybody's game at this moment.
Yeah. And I mean, just seeing, Twitter was in the news.
Yes.
Well, it seems like it's always in the news, but I know that Twitter now CEO, they are not making payments on some of their commercial real estate. Commercial real estate, people aren't returning to work. We've been talking about this since, I guess, the pandemic, quote unquote, ended. How are things in New York in terms of people? I mean, you obviously have to be at the NASDAQ.
Yes.
You're at your place of employment, but are people in general returning to some of their office spaces, or is it like it is around the rest of the country where people are saying, screw it, I want to work from home?
I mean, I think it is about 3 out of 5 days in person. I know lots of my friends who come in, they have a choice of which 3 out of the 5, but generally it's Tuesday through Thursday. So most people make a 4-day weekend, if you will. So they're off Fridays and Mondays. They work from home, but there is pressure by some companies to get back in there more often than that. And certainly the cities would like to have people just for the auxiliary businesses to stay alive. But so far, it appears that there is a settling down of in person at 3 days a week, even New York and lots of other cities. So that may be the new normal.
Yeah, it may be the new normal, but I know there are still some employers and some tech companies still really pushing for that. We're going to have to see how it all unfolds. Monica, great to see you. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
Oh, thank you, Jeffrey. Nice to be here. And my friend Jane will be back soon as well. So you guys have a great one.
Thanks, Monica. Great to see you, and thank you for sharing your perspective. And when we come back, we take a look at some of our best segments for the week. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Invesco's latest Show Me the Income study reflects on the evolving retirement industry today as it faces the pressing need to help participants turn their defined contribution plan savings into long-term retirement income. Key findings from the research uncover that nearly 7 in 10 participants fear running out of money in retirement, and only 22% were very confident they could create a retirement income strategy on their own. What can employers do to help? To learn more about the study and request the white paper, visit Invesco.com/retirement income or contact your Invesco DC professional. Cited research is based on Invesco's work with Greenwald Research. Invesco is not affiliated with Greenwald Research. Invesco Advisors, Inc. is an investment advisor that provides investment advisory and does not sell securities. Invesco Distributors, Inc. is the U.S. distributor for Invesco's retail products and private placements. Both are indirect, wholly owned subsidiaries of Invesco Limited.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house and my score wasn't where I needed it to be. I called and spoke with one of the representatives and we just had a good conversation and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. This week we discussed how ESG and sustainable investing has done little to aid the green transition. Let's take a look.
It's been a disappointment overall, and I think it's part of a larger disappointment around corporate social responsibility. For the past 20 years, and particularly since the 2008 financial crisis, business schools, investment funds such as BlackRock, pension funds have all claimed that they're going to shift their investments towards very conscious decisions that will be ethical for their pension holders and their stockholders. And so we've had an estimated 50% of Western global institutional assets supposedly oriented towards ethical purposes. And yet we don't really see a lot of changes in the world, whether it comes to climate change, emissions, or in terms of labor rights. I'm sure your listeners are all familiar with the stories from just a couple of years ago where workers for Foxconn, which produces iPhones for Apple, were committing suicide because of the horrendous conditions in the factory. And yet we don't have anything in place that ensures that companies will clean up such practices. Unfortunately, it's a classic what we call in academics collective action problem. So if you think about a bus system depends largely, or a metro system depends largely on the collective voluntary self-enforcement of people, and the same is true of any tax system. Basically, there are a few audits, but for the most part, most people are expected to follow the system. And that is how the Paris Agreement is set up. And that is how a lot of these international agreements around corporate social responsibility are set up. Essentially, they're based on self-reporting, where enforcement is supposed to be largely voluntary. Because there were so many repeated violations that occurred with corporate scandals, including a major dam that burst in Brazil, including the Rana Plaza factory collapsed in Bangladesh, where clothing manufacturers were revealed to be part of substandard working conditions. There was the development of these new international systems like EITI, GRI, or Principles for Responsible Investment. And so now we have these international organizations like the UN or NGOs that are supposed to verify that companies are following these things. But when I started digging into how those international organizations actually make sure that these corporate social responsibility codes are followed, I found that most of their funding is coming from the companies themselves. And they have very little capacity to actually check out these factories and enforce things. In fact, they rely on third-party information. What does an NGO really know about how a clothing factory should be run or the safety measures for it? So they haven't really solved the problem. And in fact, they're suffering from a basic conflict of interest, the same conflict of interest as the financial rating firms in the 2008 financial crisis, who were rating the same bonds of the companies that they were receiving contracts from. When we think about any market, ironically, it's in the market's interest to have stable regulation, because as you pointed out, if investors don't have confidence with what investment companies or banks or multinational corporations say they're doing, then they're not going to invest the finance that the companies need to run. The same is true for any kind of situation, whether we're talking about workers' rights. We don't have child labor for the most part, or slave labor in the West, because we have regulation. And we have an analogous problem with global taxation. As your listeners well know, there's all kinds of shell corporations that hide corporate profits, so that most large corporations, including Disney, Apple, Microsoft, they have offshore shell companies, and so they pay virtually no taxes in the US, even though they enjoy public services like educated workers or infrastructure. So we have the same issues in regard to climate change. What we have is what we would call a club problem. We have a handful of countries that are producing most of the climate emissions. So we can call them three large areas, China, the US, and the EU. And if each of those entities started to actually regulate both workers' rights and climate change emissions, you would see a dramatic change in the global nature of the problem. And so the SEC and even Michael Bloomberg have championed the idea of having greater regulation and transparency around CSR disclosures in regard to climate change emissions. And if they gain traction, that will be a game changer.
And we also discussed the best side hustles for college students. Let's take a look.
Really good question. Are they adapting? I will say not as quickly as maybe we would like, or maybe not as quickly as Gen Z would like, right? Because we do still see so many of the employers have this idea, like you have to come into the office, you have to come in to a specific location, you have to be visually present for whatever reason that is. But we are seeing employers start to embrace independent contractors and freelance work. And we're seeing the trend now where, let's say they had a big budget cut during the pandemic and they lost full-time annual salaries for positions. Well, the thing is, though, they still need the work to get done. So we had a lot of companies, employers who were coming onto Upwork and saying, you know what, I used to have a full-time salary staff member do this. I can kind of only afford to hire someone for 6 or 7 months to do this work. Okay, great. So the work is still there, the work is still available. It's just looking a little different than how they imagined they were going to be hiring for that. And that's certainly to our freelancer community benefit, right? Is they have a lot more employers who are coming on and saying, I used to have a full-time role for this. I don't at this moment. I might in the future, but for right now, I need a person who can do this work for me on a part-time basis or for a specific amount of months instead to do it. What is an interesting trend that we're seeing also on Upwork is a lot of companies are coming in, they're posting their projects or their just short-term work, and then down the road talking about converting those into full-time hires. So they're kind of using it as a, let's see what the talent pool looks like. Let's see what kind of applicants we can get for these roles. Let's see how well they do the work. Let them prove themselves. And then they're coming in and saying, okay, we're going to make this a full-time position. We got our budget money back. We've got our team is built up to the way that, pre-pandemic maybe. We're actually going to go and look at our freelancer community and bring some of them in as full-time staff members. So yes, they are adapting. Are they adapting as quickly as we or maybe Gen Z would like them to? Probably not. And I think that's kind of always the case. These big mega conglomerations, they're global corporations. I think it's going to take them a little bit longer, but we are really encouraged at the trends that we're seeing on Upwork with how the employers are coming in and still offering work. It might be less than what they imagine, but being open down the road to saying this talent's really amazing. We've got to make them a permanent part of our team and actually going and making that conversion happen. Social media marketing and content creation it's just not going away, right? All of these companies need it, even though their budgets might have been slashed the past couple of years. They still need branding. They still need opportunities to make sure that they are, getting face time with their customers. So social media marketing and content creation is absolutely a really popular skill set and industry on the platform. What I think is really great about Upwork and really allows for those creative skills is you putting a portfolio together. So more so than that resume that you were sending in or the cover letter that you were sending in on LinkedIn, well, I can submit a portfolio to you, right? I can custom create a proposal that I'm going to send to you on Upwork so you can see the things I've done for other clients or my vision for your business and how I can really just completely revamp your brand if that's what they're looking for. So that is a really popular option on the platform. And again, I really like the idea that you can submit portfolios and proposals and things through Upwork as opposed to that classic, I'm just going to send a resume in, hope that you click on my website and explore on your own. Kind of related to that, graphic designers, web developers, still really popular on the platform. We have a lot of project management positions. Like I mentioned, we also have personal assistants, admin roles, things like that. Yes, we also have, your tech roles, your coders, software developers, things like that. But I would be remiss if I didn't mention AI, generative AI. We're seeing a huge influx of roles coming through. We're really excited to see how that industry is going to be developing. And we absolutely see Upwork as really the go-to right now for companies and employers who are looking for Gen AI talent coming onto Upwork to kind of find and source all of that. We've got such a great, talented community. So I absolutely have to mention Gen AI as kind of this up and coming trending skill we're seeing. Higher ed is not always the fastest to move on things. I come from higher ed. I feel like I'm allowed to say that. It's pretty glacial. I used to use the phrase, you turning a cruise ship. It takes so long for them to pivot at the speed the students actually need them to do that. But I was actually just at a conference this week and we were talking about Gen Z and just their general interest in the gig economy. And I think that what is really a disservice that has been done to, and I'm a millennials also, not just Gen Z, is that we have been presenting the gig economy for so long as this secondary option, this short-term temporary thing to make money. It's presented as, oh, I'm going to drive Uber or I'm going to be an Instacart shopper. Those are not meaningful work, right? That's not meaningful roles. That's not the case. Like we really need to be showing students and new grads that you can get meaningful work. You can find a role that is fulfilling to you, that is like your dream job, and it's not traditional employment. And so yes, higher education now has to really come to the table and say, we're going to show them more than we ever did before. We're going to lay down this idea of traditional on-campus recruitment where you get an internship and you get converted to a full-time hire, and just kind of throw that out the window and say, look, yes, that exists, but there's also all of this other opportunity. Upwork's talent community, they earned $3.8 billion last year. And my ask to everyone at this conference this week was, were your students getting a piece of that pie? Did they participate in the gig economy to get a little bit of that money, or were they so uninformed they didn't realize it was available to them? Because that absolutely is a disservice. And yes, it might be, hey, I'm going to do this short term while I'm figuring out my long-term goal, but it can be a long-term solution, and it can be something that they're doing and that it is fulfilling, that it is meaningful work while they wait for a salary position if that's something that they're looking for. But in addition to higher ed needing to change, the employers need to change as well. They need to start getting creative with how they're sourcing talent. They need to be coming and looking for freelancers and independent contractors and not just looking for that traditional kind of resume. They need to really start valuing short-term work, micro internships, freelance projects. Gen Z's resumes and portfolios are going to look so much different than our millennial or Gen X ones were. And yes, higher ed needs to change, but the employers and the recruiters need to kind of get up to date with it too, and make sure that they're valuing that experience as much as they did that traditional one.
And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, visit our website, and of course, all of our streaming partners. We're back again tomorrow for another edition of BRN Sunday. We'll be breaking down all the latest news and events for the week with members of the media, academia, financial services, and government. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.